The broadcast is now starting. All attendees are in listen-only mode.
Welcome, everybody. My name is James Thomas, and thank you for taking time to attend the PSA Financials webinar. I run the assistant software operations for North America, which includes the United States and Canada. And I'm excited today to present to you a webinar on our latest module, PSA Financials. It is our version 1 release, and this is a module that's really been driven by requests from our partners and end users, and we're really looking forward to present the functionality that we have available today. Today's session will be accounting focused, so hopefully you guys have your accounting hats on today. I'm going to make an assumption that all of the attendees on this webinar has used the Assistance PSA module in the past. We won't be diving into the functionality of the module, but really focus on the impacts of some of the routine processing that you've already been familiar with in PSA. For the agenda today, we're going to cover the overview of the module. There's a number of settings that we have to be aware of, and then we'll dive right into the demo. And I will look at any questions and towards the end of the demonstration and provide answers if I can. The overview of the module is, it's called PSA Financials, so it's not to be confused that it's going to be replacing your ERP system. Rather, it assists in the integration of project accounting data into your ERP system. So you still need to have an external ERP system with your financials like general ledger, accounts payable, accounts receivable, and all of the other modules that you may need. The PSA Financials module is effectively a financial transaction database or a project accounting ledger for Assistance PSA. And using a transaction gateway, which could be any number of data connectors, Scribe being the most popular one, can be used to pass this data into your ERP system. You can use the same connector to pass data back from ERP to update our financial transaction database. A common transaction that would come back into PSA would be cash applications. So cash receipts made in the accounts receivable module can be passed back so that we can accordingly update the invoice balances as well in PSA. The main transactions that we capture are, of course, they're all project related, but focus around time and expenses, revenue recognition, work in progress, and invoicing. Work in progress is an optional setting, and we'll talk about that in a couple of minutes. Before we dive into the heart of the financial accounting processes, let's briefly talk about some of the data elements that are important in order to create accurate financial transactions. With the release of PSA on CRM 2013, you would have noticed that a number of fields became mandatory on the project form, like the legal entity. So all projects now have to be assigned to a legal entity. We use this information in multi-company environments, and in a future release where we will be doing intercompany accounting, this field is going to play a critical role. Financial periods. This is a data element that was introduced in the PSA Financials module and essentially assigns financial periods to the journal transactions that are created. These financial periods should coincide with the financial periods of your ERP solution. Booking periods. This was introduced and is available in Assistance PSA settings, and it's not part of the PSA Financials modules, and it's not technically required, but it's critical because from an accounting perspective, it allows your accounting and operational personnel to actually have control over the timing of when transactions can be recorded in a period and when it is closed. And that's critical when you come through to your month-end or weekly reporting cycles to be able to close down a period so that you can generate reports against it without any risk of that data changing because folks are continuing to post late transactions into the period you're trying to close. Dimensions are visible also on the project form. These take the form of the cost center and department codes, and if you use these, they will be incorporated into your journal transactions at the project level. So let's take a look at the different financial transactions that are generated by the PSA Financials module. First is focused on costs. Notice that I have put the word approved in front of labor and expenses. That is extremely important. It is an essential control. As you know, with PSA, depending on the levels of approval that you have set up, labor transactions can be changed until it goes through admin approval. And we need to be able to prevent transactions against which you're recognizing revenue from being changed. So we have introduced a control which requires at least admin approval to be turned on for labor and expenses. This prevents data that gets used in the calculation of revenue recognition and costs from users subsequently changing it after they have submitted their time and expenses. So in the settings, you must at least turn on administration approval for labor and expenses. This process of creating costs into an ERP system is going to vary from company to company. You may have already used an external payroll provider to process payroll, in which case your labor cost entries for the purpose of updating your financials is going to come from the payroll provider. The journal entry that you would introduce into the system would come from the payroll processor, and it would debit your labor costs and credit a variety of liability accounts. In which case, you don't really have a need to transfer the labor costs from PSA into ERP. However, there are companies that do want to compare actual costs with the standard costs of labor that's incurred through their projects database, in which case we are able to accommodate that requirement. Expenses, on the other hand, usually need to be transferred from the PSA module into a back-end ERP, especially if you're using the expenses feature in Assistance PSA. Where it goes into the ERP would depend on whether expense claims are paid through payroll or paid through accounts payable. If it's paid through accounts payable, your connector, your data connector, would need to feed the approved expense costs into accounts payable in order to create a liability voucher so that checks can be cut for reimbursable expenses back to the employees that have submitted the expenses. If you needed to extract that data and update your payroll provider, because the payroll provider actually pays expense claims as well, then you have the ability to do so by extracting that type of data. Each of these data types have transaction types, so which helps you determine from a connector standpoint which transactions you want to integrate with ERP. The process in PSA Financials that is used to create these ERP costs of labor and expenses is called the transfer WIP process. And the journal's created if you do want to transfer these costs. And this is an example, which would be to debit your labor costs, debit your expenses, and credit your clearing accounts. The clearing account would be offset by any external payroll provider journal that is introduced into your financials account. On the revenue side, we have really three main categories of revenue: time and materials, fixed price, billable expenses, and product sales. The financials processes for time and materials is really dependent upon your revenue recognition policy. Many firms recognize time and materials revenue at the time of invoicing, in which case the only time that T&M revenue is recognized into the project's ledger is when you invoice those billable items. Alternatively, there are companies that would like to recognize revenue for T&M items at the time the costs for T&M items are incurred. And a great example would be when the costs of labor that has been charged against T&M items have been approved, and those costs are going to be loaded into the financials database. It's at that time you want to match the costs with the revenue that's been earned by those costs. So there is a setting, we'll take a look in a few minutes, that allows you to generate T&M revenue automatically when the corresponding labor costs are created into the financial transactions database. For fixed price, revenue is recognized when you run the revenue recognition process, and it will create suggested revenue amounts based on the percentage of completion, and we'll take a look at how those amounts are calculated in a few minutes. Billable expenses and product sales. The revenue for these items are recognized during the invoicing process. So the journals that get created for these different revenue types. For T&M, if you use work in progress, work in progress is used if you're trying to recognize revenue at the time the costs are created. So essentially what you'll be doing is crediting your T&M revenue accounts and debiting an asset account like a WIP account. Some companies call that an unbilled account, but it's essentially an asset account. And that asset account gets offset during the invoicing process. So you essentially, when you invoice this revenue, you will move it out of WIP into accounts receivable. T&M with no WIP. So what that means is you're recognizing T&M revenue at the time of invoicing. So it's a very straightforward entry. You're going to debit accounts receivable and credit your T&M revenue accounts. Fixed price uses WIP accounting, and during the revenue recognition process, you're going to debit your WIP account or a similar asset account and credit your fixed price revenue. And very similarly to T&M with WIP, this WIP account is going to be offset when you invoice the revenue, and it will move that into accounts receivable. For billable expenses and product sales, as I mentioned, this is done at the time of invoicing, so straightforward entry. You're going to debit accounts receivable and credit your various expense and product sales revenue accounts. Project invoicing, I've incorporated this because it obviously creates accounting entries, but it's not part of PSA Financials. Invoicing already existed in the core Assistance PSA module. However, I've included this component in our webinar today because we create financial transactions from the invoicing process. So two types of invoicing, T&M and fixed price. It's important to note that when you create a draft invoice, there are no financial transactions created at that stage. It's only during the approvals process that financial transactions are loaded into the financial transaction database. And here are the journal entries created by the invoicing process. So if you have a policy of using WIP accounting for your T&M revenue recognition, you're going to debit accounts receivable and credit the WIP account that was initially loaded during the T&M revenue recognition process. With no WIP, very straightforward entry. You'll see the debit entries here are all to accounts receivable, and for T&M, you're going to credit a T&M revenue account. For fixed price, you're going to credit that WIP account that was originally loaded during the percentage of completion revenue recognition process. And then with the expenses, very straightforward. Debit AR and credit your billable expense revenue. The same entry would be true as well for your product sales. So today's demo flow, we're going to dive into some settings. The settings are actually split into two areas. One is in PSA settings and the other one is in financial settings. We'll also briefly look at the booking periods and financial periods that play a critical role in accurately creating project accounting transactions. We'll take a look at the new fields introduced in the project structure that impact financial processing. And then we'll look at the individual processes in the PSA Financials module. Essentially 3 processes: transfer WIP, revenue recognition, and the invoicing process. And we'll conclude by looking at the financial integration table and talk a little bit about the data elements that are required in order to transfer data in a bidirectional manner with your ERP system. So with that, I am going to go into our PSA settings section, and I'm going to go ahead and open a PSA setting here. The first section that I would like to talk about is under the project section. So here, 3 fields: KPI cost comparison, percentage of completion method, and the percentage of complete base. So let's start with the basis of calculation. And again, these 3 settings really drive revenue recognition method for fixed price items. This does not impact your T&M. This is really for fixed price. So the basis of calculation is typically for your denominator for your percentage of completion calculation is going to be the total value of your project. That value can be a budgeted revenue value, or it could be the amount. It's going to be unlikely that you would use the amount. Most likely, and predominantly, most firms use a budget as the basis of POC calculation, and that budget would align with the eventual contract value of that project. So here I'm telling the system we want to use budget as our basis of calculation. And do we want the percentage of completion to be calculated automatically using the budget amounts? Or do we want users to enter manually the percentage of completion at the item level? Most firms find revenue recognition for fixed price items at the project level challenging enough, let alone trying to drill it down all the way to the item level. So I would assume that most companies are going to have the system automatically calculate this based on the budget. Now, there is an assumption that if you use the budget, that you would have a budget introduced for your project. You're going to have a budgeted revenue and budgeted cost amount. You could also have a budgeted transfer amount in those arenas where you wanted to show a loaded cost. So what this is saying is we want to be able to look at the cost amount or the selling amount based on the budget. In our example for today, we're going to use the overall revenue budget of the project in order to calculate the percentage of completion. The next section, what I talked about, we need to have at least admin approval turned on and for hours, and admin approval turned on for expenses as well. Then in the invoice section, if you're using WIP, if you have fixed price items, you need to set up your WIP account here as the default ledger. Can be overridden, as is the case for the expense ledger. This is the default revenue ledger account for expense revenue, but it can be overridden at the item level. Let's now go into our financial settings. So that's located in the PSA Financials module, and we're going to go into financial settings. For the very first cost entry we talked about, which is where you want to perhaps pass on labor cost, approved labor cost and approved expense costs into your ERP, the system is asking, what rate do you want me to quantify or monetize the hours or expenses? Do you want to use the cost rate, the transfer rate, or the sell rate? I would see that it's going to be predominantly the cost rate that's going to be used, and that's how our demo environment has been set up. We talked about the two different types of T&M revenue recognition policies, one where we use WIP accounting and one in which case, in the scenario where revenue is recognized during invoicing. If you recognize T&M revenue during invoicing, you want to turn automatic revenue for T&M to no. But if it's turned to yes, it's going to automatically create T&M revenue against approved labor and expenses when the transfer WIP process is run. Invoice write-off is a setting where you have recognized revenue, typically based on invoicing, and for whatever reason your customer is not going to pay the full value of the invoice, which results in a write-off of the differential amount. And since you have recognized revenue equivalent to the original value of the invoice, and now the customer is paying you less, you want to make sure that your revenue is not overstated by the differential. So turning this on would allow you to make sure that revenue is not overstated in these type of scenarios. The revenue note mandatory, this refers to where you have the ability, based on your access rights, to override the revenue recognition suggested by the system for fixed price items. And there are a number of reasons you may want to change it. You may just want to use round up numbers. And if you turn this revenue note mandatory field to yes, the system is going to ask you to put a note or a reason as to why you changed the system calculated amount. The revenue recognition determination is set to yes. We are probably going to remove this setting. This is really to try accommodate some unique revenue recognition scenarios that are isolated to some of our global markets. But for the US and most companies, we're going to have this left turned on to yes. Then the last area here is the ledger settings. This is where all the default ledger accounts are stored for the PSA Financials module. We will be having a step-by-step guide released in a couple of weeks for PSA Financials, which will go in depth to explain what each of these fields do in terms of their impact on the financial process. But you can see here from a labor cost transfer to ERP, this is where you're going to be debiting your cost of sales accounts and crediting your clearing accounts. For labor, the same. For expenses, here we have our default AR account, our write-off accounts. We have our revenue accounts, for default revenue accounts for fixed price, as well as T&M. And these are, as I mentioned, default accounts, which indicate that they can be overridden, and they can be overridden at the item level, and we'll spend a few minutes talking about that very shortly. So let's also take a quick look at booking periods. Many of you are already familiar with this, but these are your booking periods as it relates to time card periods for your timesheet entry. These are also created by legal entity. They have a date range. And more importantly, you have control over opening and closing these periods. Financial periods is new because this is really in PSA Financials. And you want to make sure you mirror the same financial periods you have in your ERP system. And so we have financial periods defined by legal entity. And again, you can see how important the legal entity field is for overall financial processing. You have start and end dates of each period. And then you have the ability to open and close these financial periods. And that's an important control feature. So let's go ahead and take a look at a project that I have set up for the purpose of this demonstration today. So project number 18. First thing that I'd like to do is just focus on a few fields that play a role in financial transaction processing. The first is the cost center, legal entity, and department fields. We talked about the importance of the legal entity, and the cost center and department codes, those are essentially dimension codes. A lot of companies use these codes to provide further P&L analysis from a financials perspective. There may be scenarios where you have more than 2 dimension codes, in which case you can use customizations to introduce additional dimension codes both into the project form and into the financials transaction database. So you're able to mirror the same dimension codes you have in your ERP system. The other new fields that are important is the revenue recognition and status fields. Overwhelmingly, you're going to be using a based on completion revenue recognition method. In the instances where you only have T&M, you could still use the based on completion process. The financial status indicates to the system whether you have an active project or one that is winding down and ready to be closed. We have a project closure process that I've not incorporated into this webinar. We will cover that in a future webinar, and it also helps to accommodate a method that's not often used called completed contracts. And during that future webinar, we'll cover those two processes. But today, we're really focused on costs and revenue side. Let's take a look at the item structure of this sample project. It's a very short item structure. And you can see I've incorporated a variety of different item types to best illustrate the different financial processes that we're going to cover. So I've got 3 fixed fee items. I've got 2 T&M items. I've got a product item, and I've got a billable expenses item. So let's just pop this grid out. It exposes a field that's been introduced for PSA Financials, and it's called exclude from project percentage of completion. So a lot of companies have projects that don't just have labor. They have products that are being sold, they have expense items, and you may have budgeted for all of these items against the project. However, if you include the contract value of all of these items in your POC, percentage of completion calculation, you could land up with a distorted percentage of completion. The reason being is that, let's take an example. If you have a project that is to sell CRM licenses and implement, the licenses may be a large value, and they're typically recognized at the beginning of a project. So if you start by invoicing your license element before you've even started work on the project, the system would show that the project is artificially progressed, that i.e. it has already started delivery, when that's not really the case, because you haven't started work on it yet, and so you're really at square one. In order to reduce the skewing of the POC percentage, we have introduced a control here where you can tell the system whether to include certain items in the POC calculation. So if we just go ahead and double click and open one of these items, you'll see that here is the field, exclude item from percentage of completion calculation, because it's a T&M item. So we don't want to incorporate T&M items into our POC calculation, because POC calculation really drives fixed price revenue recognition. And T&M is driven by its own set of rules. So we want to exclude it from the POC calculation. Another data element that was introduced at the item level is called the ledger field. So we saw a short while ago where you could set up all your default ledger accounts. However, if you store ledger accounts at the item level, as you see here, the system will override the default and it will use the item level ledger accounts for the creation of your journal transactions. I'm just going to simply scroll through. Products, I gave you the example of why you would exclude products from your POC calculation. reduces the distortion. You can see here I have now another ledger account, revenue account for product sales. If I scroll through, I've come to a fixed price. I do want to include this in my POC calculation, so the item is unchecked. And I have no ledger account because I'm just going to use the default revenue ledger account in my default settings. Let's go back to the project. And I've also approved a number of transactions, labor and expense transactions in this sample project. So you can see here as I scroll to the right, I have budgeted hours of 100, 10, 50, 200, and 400 against my various labor items. And against those items, I have time cards charging 40 hours to the very first fixed price item, 8 hours against the second T&M item, 30 hours to the third. I also have approved expense item of $1,000, and I'm also going to invoice $5,000 worth of product. So that's really what this project has already loaded. So now we can start running through the various financial processes. So we have a budget in place, which is a prerequisite. We've got a number of fixed price and T&M items and expense items. The labor and expense charges have gone through admin approval. If it hadn't gone through approval, we would not be able to run the transfer WIP process. So let's take a look at the very first process. So we're going to choose the legal entity, choose the transfer WIP process, and select the period that we want to run the process for. If you have approved labor and expense transactions in a period that you have not selected, if you have unapproved transactions in the period you've selected, your project will not load on the grid. You will have to go in and make sure it's gone through admin approval to load here. And if this is the only period that has expenses and you choose a different period, your grid will not load either. So this is really looking for items that haven't gone through processing yet. So I'm just going to go ahead. So I've got my project number 18 here, and go ahead and hit OK. And it's going to create certain transactions. In this case, since we have not turned automatic T&M revenue on, it's simply only going to create cost transactions. If automatic T&M revenue was turned on, then during the transfer WIP process, we would have revenue and WIP transactions created as well. So let's go ahead in here and scroll to our financial transaction table. And you can see here we have, let me try and expand this on here. We've got those cost transactions. So we are debiting our cost of sales labor account, cost of sales revenue expense account. You remember the $1,000 expense item that was approved. And then they're all being offset to the clearing account. So I have a labor clearing and an expense clearing account. You can see the transaction types that are here. So if you wanted to only grab the expenses to update your ERP, you could do that by configuring your connector to only look for the expenses transaction type. Let's move on to the next process. So we've created some labor costs into the and expense costs into the transaction table. Let's take a look at the next process, which is the revenue recognition based on completion. I'm going to look at period 7 again and load my grid. And you can see here my third project here is project number 18. and I have a project value of $18,500. Let's take a look at where that came from. So if we go into the active projects and go back into the overall project, you'll notice that the contract value is $130,770. The budget is $138,400. You can see those summarized in the financials section. So where is the system getting $118,500? Well, remember that flag where you tell the system whether you want to include an item in the overall POC calculation? That's what the system is doing. So if you take a look at the fixed fee items of $19,500, $33,000, and $66,000, the total of these three budgeted revenue items is $118,500. And it's also reflected in the invoice scheme because we need to invoice those fixed price items as well. So in this project, we're using the invoice scheme. We have 3 installments set up that reflect the total amount of $118,500. So this is the fixed price value of our project. Okay? So let's go into here. And the system is saying, you know, we are 6.58% complete. Now, where is that coming from? So if we go back into our project, show you where these calculations are coming from so you can understand what the system is doing to deriving these transactions. So we know what our denominator is for the POC calculation. It's $118,500. The numerator is coming from the value created by actual labor transactions. And we have, as you recall, we have 3 fixed price items. Row 1, item 1, has 40 hours charged against it that derives a revenue value of $7,800. So it's important to note that when you set up your hour types, even if those hour types are going to be used against fixed price items, make sure you have a selling amount and a cost amount associated with those hour types. That will allow the system to determine the amount of revenue that's been earned against those fixed price items. And that's where this $7,800 is coming from. So and we don't have labor charge to any of the other fixed fee items. You can see these are blank. So the only fixed fee item that has a revenue value from an actuals perspective is the first item, $7,800. So $7,800 divided by $118,500 is 6.58%. That is also shown here in the percentage of completion calculation on the project form. So when you run revenue recognition, you can actually override what the system is suggesting. So the system is suggesting that you recognize $7,797.30. So you can override that into, let's say you want to just recognize $7,800. You can put some notes in here, and it would force you to put notes if the revenue note setting was turned on. Round up, and then just going to go ahead, make sure this is the only project selected. Just going to go ahead and hit OK. So the data is updated. So let's go back into our project and go to the financial transactions tile. And you will see that we now have an additional transaction introduced into the table. it's the $7,800 for fixed price revenue. So we are crediting the 3,100 account for fixed price revenue, and we're debiting a WIP account or an asset account. You may call it, as I mentioned earlier, an unbilled revenue account. Okay? Then what we can do now is actually go into the project and go through the invoicing cycle. So the invoicing scheme is actually a tile in our latest release, as is the forecast and the Gantt chart. So those of you that are looking at this and confused as to why these are in tiles, that's in our latest release with PSA Nova. So I'm going to go into the invoice scheme. Let me just go ahead and reload this. And I'm going to run the invoicing process here. So there are two types of invoicing available for this project because it has both fixed price and T&M. So it's asking, do you want to invoice the installments? And I'm going to say, no, I want to cancel that, and I want to do my T&M invoicing first. And so here, let's just change this to a more realistic date. Let's say we're invoicing at the end of July, and the invoice date is also in July, so that we can. And so here we have a number of invoice items, as you can see. We have billable expenses of $1,000. We have two T&M items, labor items, $1,320 and $49.50. And then we also have software or products worth $5,000. So these are all the items that are invoiceable with the exception of the fixed price items. So I'm just going to go ahead and hit OK here. And that process creates our draft invoice. And you can see that all of these items that were on the previous screen appear here. And we're going to very quickly go ahead and approve it. Until you go through the approvals process, it will not create financial transactions for this invoice. So now we have invoice number 53. Let's go ahead and take a look at financial transaction table for project 18. And you'll see invoice number 53. What's important to note is that the ledger accounts are all different because the system goes to the item level to see if there is a revenue account. If there is one, it will use it. Otherwise, it will use the defaults. So you can see here the services are going to two different GL accounts, 3110 and 3120. Then we have item also. This is a third T&M services item. And then we also have product sales and expenses all being credited. And then we are debiting the accounts receivable account. Okay. Back again in here, and let's actually. go and actually invoice the installment. Clicked on the wrong button there. Let me go ahead and run the invoicing process again. And this time we're going to say yes, we want to invoice the fixed price items. So hit OK. And this is our very first installment, 25% of the value of the total value of the project. Go ahead and change this date into July. These dates are important because they get stamped into the journal entry, and you will use that to determine the periods in which you want to update your ERP system. Go ahead and hit OK. It's once again going to create a draft entry for us. And I'm going to do a quick approval process, save it, generate the invoice number 54, and then let's go ahead and take a look at what that did for us in our transaction table. So here we have invoice number 54, and it's debiting, the offset to WIP, so it's crediting the WIP accounts for each of the 3 items, and it's debiting the accounts receivable transaction. All of these entries can actually be looked at in the PSA Financials module as well. So if we go to the financial transaction table here, this table shows all the entries that have been created. What we see here is project-specific financial entries. So from the project form, you can view the financial transactions that are related to the project. If you wanted to get an enterprise-wide view of this, you can come into the active financial transactions table. Very similar to the project table. We have a few more items that show up here, like whether it's gone through an integration process. You can use this flag to ensure that the items are not transferred twice by changing the flag to yes after it's gone through a successful integration process. You can see in here also that this is a great table to write a custom report against, because you have a lot of data elements here that will enable you to create some really nice project financial reports. You have GL accounts, so you can create a P&L for your project, as well as balance sheet items for your project. You have WIP account, which is an asset account. You have your AR, which is another asset account. So you can create really a mini P&L and balance sheet project by project, or you can group them by departments or legal entities or cost centers, right? You have different transaction types. You have your debit and credit amounts. So this is a great table against which you can create reports that should essentially mirror how your project accounting is being updated into your ERP financials. Now, if I hit New here, this will help me look at all the different fields that are available for a financial transaction. So there's a number of fields here. Some would be mandatory and some are optional fields. So this gives you an idea of the field requirements when you are developing a connector into your ERP system. The transaction types, you can see they're all flagged by transaction types. You also have one transaction type we didn't talk about, which is the invoice payment. So this helps cash applications from your ERP accounts receivable module to get transferred back into the PSA module. So using a transaction type of invoice payment, a debit or credit amount, an invoice number, and a project ID, and a financial period and date, you'll be able to import these this type of data back into PSA so you can update the document value of your invoices so you can see what the unpaid amounts are. So that is really what I had for today. I'm going to take a look here to see if there are any questions. I don't see any questions at the moment. So just to conclude here, I wanted to make note that the step-by-step guide for PSA Financials is going to be released in a couple of weeks. That will really help you understand some of these settings better. But the best way is to set up a test instance of PSA and play around with the various settings and the different GL accounts. And that's the best way to gain a good understanding of what the system is doing and how those settings impact the creation of the different financial transactions. So thank you for being patient and listening to what is sometimes, maybe often, a boring subject, which is accounting, but necessary in the world that we live in. Have a great day, and we look forward to seeing you on a future webinar.